Hey, everybody, great to have you back for Swing Trading. My name is Mike Fairbourn. Folks, recognize many of you in the chat. Good to have you on board. Today, I did want to take a look at some bullish trade setups for options, specifically using that swing trade. So trying to gain some potential option income through those shorter term time frames, kind of like a lot of times in many cases, monthly type income. So I want to dive into that with you all today. Look forward to that very much. I think it's going to be interesting to look at some of the bullish bounces too that we've seen with this incredible volatility in the market. So recognize many of you here. Great to have you here. I did not want to disappoint John the Noble Savage, so I did bring my black in celebration of our volatility day today. No, welcome to you. We've got Will, Kelly, others here. Great to have you. Jay Richardson and many more. Richard, good to have you folks. And many names I don't recognize, but nice to have you here, folks. And any questions, comments you have, definitely throw those in the chat box so we can address those for you. We have Connie Hill in the chat to address those. I'll do my best to keep an eye on those, but got some great stuff in store for you today with plenty of current examples in the market. So with that, let's turn it over to some disclosures so we can get this show on the road here. All right, this material is intended for general information and education purposes only. Now, options do carry a high level of risk that are not suitable for all investors. Short options, they can be assigned at any time up to expiration, regardless of the in-the-money amount. Now, a short put, which we'll be looking at today, does risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Schwab does not recommend the use of technical analysis as sole means of investment research. The paper money software application that we'll be looking at and utilizing today, that is for educational purposes only as well. Investing involves risk, including loss of principal. There is no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Dividends, if we discuss those today, they are not guaranteed. Now, I do list the futures and futures options trading disclosures just so that we have them there for us to look at the option charts. We do not trade futures in this class, but we do look at those futures and futures options chart from time, well, basically just futures charts. But with that, let's turn it on over into our discussion and look at the S&P 500 here and now. So this was the pretty big bounce. What was interesting today, let's go full screen on this. Just as a quick note on this, I want to give you guys some of the perspectives that traders might be looking at as they've taken a look at where the markets are at in this move, because we had held for quite some time, into this tighter band up top. Right there was kind of the low end of the channel. Below that 6,800, we definitely dipped below that today, didn't we? By the way, as the VIX simultaneously shot up above, I want to say 25. I think it went to 27. We can take a quick peek at it. But what's interesting here, and what I was going to say earlier, is if we zoom on into this, just watching this going forward, because a lot of the stocks that we look at in this class, they are kind of tied into, if it's bullish swing trading, the market push can help those. Looking at what the market's doing, is it risk on or risk off? But one of the things I was going to say, and we weren't here earlier, was getting back up above that level, which we are right now. Now, will we close there? Got about 55 minutes left in the trading day, but all else equal, traders would look at that as being more than anything a positive than a negative, because you got back up above that resistance level. Not to mention, that is a fairly large hammer pattern, and that's really quite large. In fact, to get that average hammer, you're just looking at maybe 1-2 size the body of the candle, right? In terms of the lower wick, you're looking at maybe 3+, and that's basically showing, at least as it stands right now, and we know one thing about volatility, conditions can change, and they can change quickly, but that is what you would call, as of today, market rejection of lower levels, and it pushed prices back up. So all else equal, a positive there. Just a quick review of the VIX. Yeah, we shot up. Yeah, I think we hit, so was it closer to 28? I think we actually did hit, it was 28 actually. We hit 28 on the VIX. We've been talking about this a little bit in that markets and sectors class that I teach folks, and that's this. When you come up and you hold near that 20, and you just kind of sit in this range, it's kind of this broad range. You're holding that level as opposed to shooting up one day and then not holding it, just coming back down, not down. And then this was kind of a little bit of a more of extended run up to the upside. But you can see over here, what actually ended up happening was we did shoot up because we were holding this ground, and you can have extended runs to the upside here, and that could be weakness to the market. But just as we had talked previously about this break above 20, look at the tops with me. Where have we been finding market rejection? Basically at that level. I hope you guys appreciate my almost straight line. I'm getting better at this with my new mouse, but it's yeah, get the idea, right? It's right around that 28 range that we tend to dip, and we saw some pretty good market rejection there too. So if we come back here, all else equal, if we start to dip, that could also be construed as a positive, as the S&P maybe shooting up a little bit. So that could be interesting again for bullish type trades. Now, a quick note too, really super fast here, because we just need to address it. The NASDAQ itself bounced up. Now, remember, when you're looking at the Mag 7 that we've talked about before in this class, in fact, I'll just pull it up right here. Some of these have been magnificent. Others might not have been. You can take a look over here where they have been at, but it's not a complete percent of the S&P 500, but a lot of analysts, I've seen estimates of around approximately 40% movement of, actually not even the NDX. It might be higher in the NDX, but that's the S&P 500 because it's heavily market weighted. So keep eyes on this. In other words, this could play a key role for bounces to the upside, and you want to be mindful of that as we're looking at swing trades. I didn't want to put too much on your back today, but at risk of doing that, I wanted to state that because it gives us a kind of a powerful backdrop as we dive now into swing trading for monthly option income potential, okay? So let me do this too. I'm going to just take this off. I'm going to draw on the screen here. All right. Okay, got the man in black, but we've got the black backboard as well. Perfect. All right. So no, it's let's do this. So we've got a couple of different scenarios I want to look at, actually 3 in total, as we talk about within swing trading. Okay, as we look at swing trading, right? And that swing trading is generally just those 3 to 15 days of a general move that is like this. We want to build prices coming up. So higher highs and higher lows. What we're trying to do is really capture these moves over here, folks. This breakout range right here, which might come off of a flag pattern. It might come off of a bounce right here, let's say off of a flag or a different type of price pattern. We'll see that happening pretty frequently. But that is general swing trading. Like I said, it can be up 3 days to 20 days, in that range. I've seen 15 days as well. But you say 20 days, yeah, 20 market days, you're getting right around a month. So in many cases, it's like less than a month, but it can be very short term as well. That's swing trading. I know many of you know this, but we do have a few new folks in the class today, and I just want to address that because that's just broadly our discussion today. But folks, it's those momentum moves in the direction of the trend. There are generally 3 different types that we look at over here. Let me talk about the very first one over here, and that is what I just kind of illustrated here. So if we're looking over here, we've got a move coming up, we've come down, and we've begun to bounce. And that is the first one, the bounce trade, okay, that we could look at. And what are we looking at here? Prices potentially going up higher into the future. We're really looking for strength in here, okay, to follow through. We're trying to find the strongest portion of that strength. So you've got a long-term trend possibly that's up. You've got now a short-term trend that's also looking to be up, and you're looking for that power, that powerful move to continue this trend to the upside. We've got the bounce trade. Here's another one I'll throw out here. It kind of sits in, it could be part of a flag pattern as well, but it's something like this. We've already got a breakout occurring right here, right there. So bounce and breakout, another one we'll address in this class. So it breaks out. I'll just put break in here for short. Well, breakout, fine. Breakout. There's the breakout trade as well. Also, very much in line with strength. You're actually maybe getting a little bit more confirmation in here because you were able to get above perhaps a key level of resistance right there. That's the goal. Down here, yeah, you had resistance. You haven't gotten above that yet, but you are bouncing up. Now, to mix it up a little bit, we have another one over here, and this is one we'll do from time to time as well. I want to do an example trade in each one of these today on how options can be set up, just using current examples. And here's this one. You have a run up, and you might have seen a consolidation here, and you've run up again, and you're kind of in a sideways channel or whatever it might be. There are a lot of different types of scenarios, but you're all the way down to this same level. So this is not even bounced yet, definitely not a breakout. Instead of touching resistance, it may in fact be bouncing off support. And what we're just referring to this as, it hasn't bounced yet, so we're just calling this a pullback. Now, folks, if you look at each one of these, they all have one major thing in common. And this can be across different time frames for sure. But that main theme is we're trading with the direction of the trend, and that is the expectation that prices might continue going forward as well. Every one of these is trending. At least there is a designed underlying trend. For example, over here, we have a long-term trend. We're in consolidation here, but the underlying trend is still up. Okay, so these are the different scenarios. Let's go through each one of them as we go through these, and we'll do current examples. All right, so back to our chart screen here. Let's dive into it right now. So some of those bounce trades looking at in the market, CMCSA, a good quick way to find these as well. This is Comcast coming up. There's a little bit of a bounce. Can you see the bounce over here? Maybe with the flag right over here. So there is your trend, higher highs, higher lows. You're coming down here and you're setting up, and you might even be closing above some of these prior highs. Now, we don't know if we'll get that today, but it may signal a sign that, hey, possibly we're ready to get going in here. Now, a lot of traders, and we talk about this mostly in this class, but it, folks, is the bounce trade right here. This is the bounce trade. Maybe some indication we can look for further signs, like another follow-through day. Other things can happen. This is kind of like breaking above, or kind of closing above its range right now. It hasn't closed for the day. It's trading above its range, I should say, right now. But the possibility of a general follow-through here in the direction of the underlying trend is what we could be looking at. Now, having said that, what we want to look at now is, and point out is, yeah, there's the possibility of putting a stock trade on. In fact, you have the stock trade right here. You've got, let's say if somebody were to put in 100 shares, well, if this was a flag pattern, we could anticipate prices potentially just going like this. Up to this end, you take this exact same price range and you draw it off the bottom right there. And that would be what we refer to as our target. This is referred to as a T2 target. The T1 target, by the way, is up to this level, and that could be another level. Now, here's the thing. We can try to expand our expectations of making the trade possibly a profitable trade, maybe more easily, as opposed to having a stock price that could be bouncing around over here. Remember, when we buy the stock, what direction does it have to go? We'll just say up, right? You try to buy low and try to sell high, but it's with the trend. You're getting some indications and possible flag pattern. Great. Okay. But if we were to take a stock like this and maybe sell down here a put in this range, I'm just going to point to a 28. It's just sticking out right here. If we sell this minus a put, I'll just say like we sell a short, we're short a put, same thing as selling a put. Well, we have a little bit of room in here that could happen because traders are expecting prices to, from this point, they could go up. I've already drawn the sideways. I'll do it in yellow though. It could go sideways and it could even go down. And the trader's expectation would be maybe that they just are going to make the maximum gain, right? Because if it holds above this level by the option expiration date, and we're looking at generally 20 to 50 days. I'll look at that in a little bit more detail here in just a second, but 20 to 50 days out in the future, If we can hold above this lower level, well, traders might be anticipating getting that. We did say that, short options could be assigned at any time, but, often what they're looking for is if they hold above the strike price by expiration, you can collect that full amount. Now, this is kind of a lower price stock. I've got some other areas to look into, but consider that versus the long stock. I'm going to draw it again. Price is up, just like a swing trade you might anticipate, and that's what we'd be looking at here possibly. Sideways or down. Those three directions when we're selling a put. Right? Now, by the way, if the price of the stock goes below that 28 by expiration, we'd have to buy with standard equity options contracts. One short contract is equivalent to 100 shares of stock. So some traders will use this to try to buy stock at a lower price too. Some will. Some are just looking for income. That's what we're talking about today. But if that were the case, you still get to keep the option premium. You get to buy lower, and you might position that where you're buying at a support level through here, right? There's been a lot. I mean, that's a last major level where we had touch point, touch, and touch right there. So there could be a number of touch points that come down through here as well. So keep that in mind. There are some additional ways that some traders will try to buy shares lower as well. But that is generally the short put, though. It can go three directions and you can still make your max gain. Now, you are held to that premium level as opposed to, though, just buying stock. Now, you could make more on the stock, but again, we're looking for option income, okay? And what has happened recently? Well, we just looked at it. The VIX shot up. When the VIX shoots up, we can oftentimes afford to sell lower at a lower strike price down here and still get paid possibly a higher premium down at these lower levels because the VIX is up. In fact, let's go over to that right now so you can all see it. Here's the trade tab. There we go. Now, first things first, here are those option timeframes. Generally, we say 20 to 50 days. We're kind of a little bit below that. We could still look at it, but there's your 17 and there's your 45. So you got basically the front month, you got the next month out for April, you got 45 days to expiration. So holding above a strike price by that range. In fact, what I'll do is I'm going to just go in here and we'll just set this up so we can take a look at it a little bit easier. Now, we don't have a ton in here. In fact, for this stock that actually has, I've got a lot of little, oh, wow, I've got 6 decimal places after my volume, but that's about 17 million shares. That liquidity can be very effective as well, right, to be looking at too. But we're going to be looking at a couple of different option Greeks here just to help us along the way, right? So this has shot up a little bit, and that is the implied volatility. I'll just put IV for that month, for that, for this monthly contract. Okay, and you see that right over there. All right, I got the Theo price. I'll take that out right now, and let me just put in one other one here. In fact, what I'll do is I'll just go right into our Theta, not Theo. Okay, so there's the Vega. Now, keep in mind when the VIX shoots up, every 1% increase in the Vega here, that applied volatility, can influence the option price by the amount of that 1% change. And so you come over here, you look at the Vega, we've shot up quite a bit. And for every percent increase, it adds, in this case, I'm looking at just like the 30 over here, it adds 2 cents for every 1% increase. Folks, long story short, it makes those options more valuable. That's good for us. If we're selling, we can afford to sell lower. I'm going to scoot out over here. Just take a look at the 45. There are quite a few in between this range over here as well. And you can see over here, here is actually our, we've got a 29 and a 27.50. We've got 2 of these here. And just to kind of highlight how this would work on a basic short put initially, here is your 29. I did want to reference the delta real quick because that is an expectation that traders might have in terms of what that delta amount means. And again, the delta just measures for every $1 that the price of the stock goes up, it will impact the option by the amount of the delta. Now, that would be good for us because these are negative deltas, right? They're negative. And you can see that right over here. they're negative. So if the stock were to go up $1, it's really going to have a huge impact here. It would, reduce this range by 26 cents. And that's in our favor because ultimately, folks, we're looking to get that down to zero at expiration and collect. For example, if we come over here, it says a lot of traders will look for that 20 to 40 delta range is an expectation. They say a 20% expectation to a 40% expectation of us not reaching those levels. Let me show it to you right here. See that right there? That tells us 26 delta. We got the delta set up right there. That there's only a 26% chance, according to delta or expectation the trader might have, that prices would go below 29 by expiration. Now, we built a few other things behind this, haven't we? We built the trend, higher highs and higher lows. We think prices could go higher, perhaps, if we're looking at this as the trend continuing in a bounce trade. We're setting our short put down below that level. It was at 29 to try to capture that amount. Okay. And if prices go up and the VIX goes down, that's going to help us on the flip side, because basically a 1% decrease in implied volatility is going to cut down this amount by 4 cents every percent increase or every percent decrease as well. So we could have a couple of things really working in our favor fast if prices go up. If prices go sideways for a while, well, we've got the theta column to help us out, right? That's the time decay each day. It's consistent there. So let's do this. I'm going to go ahead and, if we look at the 29, back at it, it's right down through here. That's our 29. And you'll notice that 29 might have some support on a prior high over here too. There's your 29 right there. So there could be some support there for a short put, perhaps at this level as well. I'm just looking, there could be technical support. That's not baked in to those option Greeks, right? This is just price action that we're trying to look and say, could there be higher expectations? We've already said, some traders will say, yeah, there are higher expectations of a rally here. But just in case it goes down, maybe there's a tendency for it to bounce over here too. So we've got a couple of things working in our favor. Let's go ahead and set this up right now and I'll show it to you. I'm going to go ahead and just click on the 60 right there for the bid and show you what this looks like. So if we go over here and click on confirm and send, that's it right there. So looking to take a 0.6, right? The multiplier here is 100. And so it is $60 over that time frame. Now, this is a lower price stock. We're definitely going to be able to get more, at higher price stocks, just generally speak. Well, we'll take a look. I can't say definitely, but higher prices do help to generate more income, all else equal. But, it could also increase the buying power effect. The buying power effect, to put this on right now, is 410. But notice over here, there is a max loss at $2,840. Okay, there's the credit right there. So go ahead and take a look at these. You'll notice over here too that our break even, the BE on this trade, is lower than 29. Remember how I mentioned earlier, if prices do go down, and let's say there was an assignment at 29, for example, you get assigned because the price of the stock is below there by expiration. Actually, remember, you still get to keep the premium. That's 60-cent difference from that 29 number, right? So it's a little bit lower, but that's this trade. I'll just go ahead and put it on. Is an example trade over here. Now, a couple of different things to consider. If the price of the stock were to break below a certain level or even come down and touch off at 29, maybe I want to know. This is one of the things that traders can use, on the platform as they go in here and take a look at this. We can also get indications like, hey, if it's going down too much, just help me be aware of that. Let's say it goes below 30 or something. I can right click over here and just send out a custom, just an alert. And I can just say below 30, right? And I just need to set this up at or below. And then I can take a look at that right there. Now, just a quick note, because we are dealing with alerts. Alerts aren't guaranteed to be delivered or delivered at any specific time, speed, or time frame, and should not be used as a replacement for actively being aware of your positions. Now, I haven't had any issues with alerts. My alerts have come through, but we wanted to mention that because things can, there could be an issue, but this could help remind us. And by the way, just a quick note too, before I did that a little quick. If you want those to be sent to your mobile device down below, just make sure that mobile device is, yeah, you're not going to get that if you don't have the box checked. You just won't. So get that checked, and now you can have this position there. All right, so that's a bounce trade. Let me show you another bounce trade. I've got some examples just to kind of highlight here. Here's one on Keurig Dr. Pepper. We broke above some highs here, kind of an ascending, you know what, actually, sort of a right angle triangle, actually. We broke above the highs. This is, folks, staples, consumer staples. Now, this is obviously in the beverage area of staples, but it has been one that's begun to kind of break out recently. You saw the breakout in your testing right there. It broke higher after, so it's a post-earnings as well. It's had some interesting money flow, other momentum type indicators you might be looking at that could be, tied to volume or whatever. That's another one. And it too is actually a bit lower priced as well. Just as an example, come in here, you can look at this for a paper trade example as well. Once it loads, there it goes. So there's your 28. Notice that the premiums over here aren't too high. But folks, this is a way, again, when we're selling monthly options for potential income, it gives us a chance to let the price of the stock go up, sideways, or down under conditions where we think there could be strength, because every one of those conditions we looked at, breakouts, bounces, and pullbacks, there was an underlying trend that had been developing, and we're maybe looking for a bounce coming back up above and extending a little bit higher. So as you go into a portfolio, you look for, just sort of like monthly income, and you know what to expect on a per contract basis based upon what you sell at, $60, but it's until, that monthly contract expires, if it were to work in our favor. So that's, swing trading with maybe some edge to it in the sense that you're giving yourself some buffer zones for prices to potentially come down and break up higher. We talked about this one in one of my classes as well. This one also had a breakout. It's still just kind of holding in here, still in that same field of consumer staples, McCormick. But many of these had come down. We were looking maybe at the possibility of a rotation because post-earnings, we'd seen some strength coming in here and maybe some buying activity, money flow, and maybe some momentum in terms of RSI as well. So we saw those. Now, we're going to shift gears a little bit here. And what I want to do is I'm going to go into pullbacks before we go into, let's go into breakouts. Let's go into breakouts next. So here is a breakout today. Now, I want you guys to stop and think about this. When you have big moves in the market, that there's a lot of volatility, a lot of times you're going to see some areas that might not be as impacted based upon, let's say, global conflicts, particularly with companies that are maybe stationed in the US more. I don't know if Target is completely in the US. I'm sure majority-wise it very likely is. But a couple of different things here. This is on kind of a very volatile day, but all we've shown here is strength. And this is that pullback to the prior high and a breakout. Now, volatility is high. So we could still look at maybe contracts that are down here at that lower delta range. We said 0.2 or so, even possibly lower, with an expectation of maybe a trader might have of prices continuing to go up. Now, these guys did have good earnings. And one of the things that's plagued this company, well, at least, the shareholders will say this. Maybe there's part of that to be true, but right about here, they did also elect a new CEO. And that actually came in, it was actually Feb 1st. Now, I'm just looking at market reactions here. I'm not sure his background. I know it's I just read, a profile on it a little bit ago. just to kind of look behind the scenes looking at this company, but we did see a pretty sharp bounce there. So the market's expecting some strength, and maybe some things were said here today on a very volatile day. But that is your move right there. So do we have, maybe through the eyes of a trader, maybe some additional confirmation here? We talked about that. Yeah, we might. There's your breakout, big volume here too. So some would sell down here because even after earnings, there still might be some lingering implied volatility that could keep prices up. Here's the VIX. There's your move to the upside here. That's perhaps more volatility. Now I'm going to go right back into TGT because I just wanted to reference that again. And let's just take a look at some of these trades over here. Now I'm actually going to start with this March because I did notice that, and this is interesting too. We haven't really gone into this too much, but even post earnings, have you guys noticed that the implied volatility might take a while to dip back down? In other words, it might take 2 or 3 days from an earnings event. Why don't I just show you? How about that? Yeah, let's do that. Okay, so over here, implied volatility, because we've got it right here on the Thinkorswim platform. Implied vol, I'm going to just thicken that just a little bit though so we could see it a little bit better off the bottom. Okay, do you see how volatility had shot up over here? Okay, now it did dip today, but we're still at 38. We have had more moves down below 38 than we've got. There's still some remnants in here of implied volatility because earnings just happened. Okay? It can take a little time to get that implied volatility out, particularly on various months. This isn't 38, this is 41. Some of these others are a little bit higher, but let's do this. Back to TGT. Where was my 110 at? Let's do it right here. 110. Wow, it's a ways down here. Okay, so 110. So what is the delta on that 110? It was a ways down. It just happened to be sticking out like way down here. That's a ways away. I mean, here's 120. We're over, 10 points to where we had about 11 and a half points to get down through here on a pretty bullish move that, again, expectation might be up, sideways, or down. And look at how much down you get if that was the expectation, right? To try to collect max gain. So let's do this now on the breakout trade with some earnings behind it. Now we come over here and we look at it so you can see where they're at, but look at these deltas. Wow, these are low. So we are less than 20 over here. So the expectation is less than, okay, here's 20. It's about 113. And some traders might select a 113. Some might say at 20% expectation of the price of the stock going down to that level in the next, that's right, 17 days. See how we're still carrying this implied volatility? It's still there above the, it's above the marches. And look at this. If we go down here, that's a 14. So just using like what's behind the delta, it really just kind of thinking about historical implied volatilities. 14% chance. Some traders would say, I like those odds. I like those numbers. And so they might try to sell somewhere in between there. Maybe a 0.8. That's $80 per contract right there with these types of probabilities. So we're looking at that monthly income, but there are definitely ways where you could say, well, I really don't think, Mike, that's kind of a ways down. Maybe we could go like, here's a 111, or there's your 113 right there. The expectation is still a breakout. I'm going to choose the lower one, just for an example trade here. We're going to go with the 0.14 delta or the 14% expectation that a trader might have of it going down here where things are trading at right now. Now, based on that, could it even be a smaller expectation? Yes. Because why? Earnings, new CEO, breakout trade. Let me show you something. If we did that 110 right now for $80 in 17 days, not the 40 like we looked at on the Comcast, let's go over here and take a look at this one. I'll just shoot for somewhere in the mid. You could try to get a little more just by bringing that bid up, right? Let me lower this down. Why did I do 110 there? I didn't need 110 there. I needed 50s. Oh my gosh. Yeah, that's plenty. Probably 30 does the trick. So I don't have so many. Yeah. There's your 30 strike right there. All right. So there's 80. But watch this. If I click over here, because we'll be selling that 110, it's at a third. I just noticed the delta went down to 13 here as an example for that swing trade. Buying power effect a little bit higher here. Like kind of a lot higher, right? 1,200, almost just below $1,300. Now the max loss, and that is if the stock were to get a sign and the stock goes to zero. And some traders would say this is a very, they don't think that's a high expectation, obviously, of Target going bankrupt type thing. But we did have to state it because that truly is, the potential there. I mean, it is what it is. But there is your credit right there. Now the buying power effect is higher. Okay, I'm going to put this one in just to kind of highlight this, but the next example on the pullback, we're going to mix this up and we're going to do what we can to adjust this buying power effect. Let's go ahead and send this through right there. Is it going to fill? Okay, we're still sitting on it on that example here. Okay, and by the way, one other thing you can look at too are additional technicals. This target has been holding down here for a long time. This is kind of a bit, I'll just show you right here, because I do like to do this just for expectations of where prices could go. Do you see the cup and handle right there? That's a pattern that a lot of technicians love to see, a cup and handle, which is a flag pattern at the end, because there's this expectation. I'm just going to draw it. When you break out above this range here, that you might do that exact same trade to the upside. Now, some traders would say, Mike, some would say, who are really bullish, they'd say, you're crazy to do a short put down here. I think it's going to go higher. Well, that's based on different expectations, right? Using stock. But this is some way to do it. And traders will often start a position with selling puts. It may be a higher expectation of being profitable. Once they get a breakout or something, or more confidence that the move's going to move up, that's when they go in and they do the stock. But they can do it on the same position. You just have to be aware of risk that you're putting on, combined risk. Okay, folks, do me a favor. If you're finding usefulness out of these presentations, smash that like button. It really helps us continue on with what we're doing and educating within our discussions here. And also give us a follow on our Trader Talks channel. I'll throw this into the chat real quick, just so you guys have it here. And there we go, right down below. Yep, and just be sure to give us a subscribe. Of course, you get access to our playlist that way. It's all free, of course, and all the different content that we have listed here. Now, also, you can follow us on X, Connie Hill CS, Mike Fairbourn CS. This is one that I did post on Google, and that's where we're heading next. I posted this for you guys, but we're kind of right at the 100-day moving average. There's the X post right there, but Connie Hill CS is the other one. By the way, there is a survey in the chat. If you get a chance to fill that out, I really appreciate it. Just 2 questions in there. Liked it, hated it. And you can also comment too, but appreciate that. Okay, so cool. Let's do our next one. And this is on the pullback. Now, I've got some examples here on the pullback and a few to take a look at. We want to put a trade on, though, before we're done. And this was that Google. And like I pointed out, I'm going to narrow this down a little bit. One of the Mag 7s. Let me just go over here real quickly, and I'll just flip this to a 100. Sometimes, not every time, but prices might bounce when they reach a moving average as they've been sitting at support or near support. You can see support here. It was resistance, but it became potentially support. Support, support, support. We're very close to it. We don't know if we'll get a bounce here, folks, but this is sort of a classic pullback. Again, what's the direction of the trend? Do we have the trend in our favor still, long term? Or intermediate for that matter? I would argue we might. I mean, that's a pretty big move. This is a 1-year chart. And we just came off an all-time high here, and we're just kind of right back at the prior lows. Some traders could wait for more indications of a pullback, but if you come over here and take a look at it, Okay, there's the fill on target. But if you go over here and take a look at this, we can also say, instead of getting into a position right now in terms of stock, this might be one of those classic examples where traders might say, hey, you know what? I might start a position with a short put, and then if it gives me more indications, maybe I'll close that short put, take what gains I've got, but maybe I'll add a stock position because I think it's going to resume up higher. Let me show you right now. Let's take a look at those deltas right now. Again, that's the 100 DMA right at that level. Sometimes that could be one of those longer term moving averages that can, or intermediate term moving averages that can kick things going in gear. Now, as we look at this, here are and we don't have any, so you've got dividend event right there, but nothing through March, or shouldn't be anything in April either in terms of earnings announcements. Now, if I come over here and take a look at this, where are my deltas? Well, there you go. So is that implied volatility helping us over here too? Perhaps it is. 30, getting close to 38 for this monthly contract for 17 days left. Not a lot of time left, but again, building on what we can get from that theta. And the premium from the implied volatility and its impact from Vega. So coming down here, where's your, look at that, 280, 285. If I just did the 280, looking over here, I'm going to do the 280. It's down here a ways. It's another level down. And that's going to put me right at that 20, actually a 17 delta. So 17% expectation. If I click on this, in a very good spread in here, always be mindful of that. In fact, I'm going to go over here right now and just give you guys one of my standard columns, just like, well, I'll just use this for now. Here's the option. Look at that. Wow, that 280 that had that delta in there, open interest in the 5 figures, that can really help keep these spreads tight. But if I click on that 280, look at this. Whoa, okay, we're almost at 4,000 here. Okay, 4,000 to get $235 for one contract. 235, so it's quite a bit more, but it's a higher price stock. But one thing we can do to lower that is we can buy a put over here. So let's go 5 wide. I'm going to hold the control button down on the keyboard and click on the ask price. There you go. 64 cents. Look at this. Whoa, 436. But to bump that up a little bit, to get back up to those higher premiums, let's just say I did 3 contracts here. Okay, that's a lot less than close to $4,000. It's about $1,300 with 3 contracts, and we've built our credit up. You know what else we've done? We've substantially reduced our max loss. We've defined our loss in here too. So this is referred to as a bull put spread. Let's do this one instead as an example over here to show you that that can be used by, I'm going to send it through, but by buying the higher strike price, right, that we did here. Excuse me, selling the higher strike and buying the lower. And there it is right there. So not only does it define our risk, but it lowers our total risk too. That was our initial risk with just the short put, folks. 27,000. We dropped that down to about 1,300 and change. Okay, so I wanted to give you some ideas today, but that's what I wanted to discuss. Again, love to have you follow us. Give us a like if you like today's presentation. More of this. Generally, we talk about stocks, but I did want to bring in options because love to bring in options even on a weekly basis too, or a few times during the month, a couple times during the month. But consider giving us a follow on the Trader Talks webcast. I sent that through. Send that through again here for you though. But just some additional opportunities, potential opportunities to find ways to generate that monthly income that have that higher potential for moves. And so an expectation that traders might have with patterns and trends, etc. Bounce, pullback, breakout. Thank you so much, Connie, for your help. Guys, have a great rest of the day, and look forward to seeing you next week. Take care, all.